Hi there. Thanks for tuning in today. Today, I want to talk about that part in the selling cycle where, upon placing a firm offer on a property, you negotiate the conditions date. So, typically, these days, anyways, it's 5 to 7 to 10 days right now, as the market allows. And the one I want to talk about particularly is financing conditions, and more so the three main factors, the key points that you should address as soon as possible when it comes to financing conditions. And that is your employment, particularly the stability of your employment throughout the application process, and also your creditworthiness, and again, the stability of your creditworthiness. And finally, the most dreaded one these days, down payment verification. Okay, let's start with income, particularly the stability of your income. And what I mean by that is from the day that you started your application with your mortgage broker all the way until the date that you complete the real estate transaction, the closing date, make sure nothing changes. So with your employment, that now is not the time to quit your job or resign from your job, look for a better job opportunity. Keep all that stuff the same. Even if you're getting a promotion within your job, I mean, that is an exception, then that's great. We're just going to need documentation to verify that further and so on. That'll improve your footing on your application. But whatever you do, don't make radical changes. Now is not the time to go from an employee where you're being deducted at source to perhaps now you're going to swing into an independent contractor type of payment, where now you're technically going from being an employee where you're deducted at source to a self-employed applicant, and that'll turn your application upside down. So keep your employment, your income situation the same from start to finish. Now for credit, same sort of concept here. When you started your mortgage application to when you complete the transaction. At that point, when you start the application, your mortgage broker should disclose to you what they see in your credit report. Oftentimes, credit brokers are just going to say, hey, here's your credit score. Well done. You're doing awesome. And they proceed to the next stage. What they should provide to you is a list of debt that they see within your credit report. And now that we're all on the same page, we can both manage that expectation together. So whatever your debt is today and your account balances and your monthly payments, again, that should not change all the way up until the closing date of your real estate purchase. And of course, if something does change, inform your broker, your banker, and let them know. I always tell my clients when we do the pre-qualification, I have these long, masterful, elaborated pre-qualification reports that I issue to my clients. And within that, I fully disclose what I am seeing in the credit report. And I list the debt, the balances, and the monthly payment sources. That way, if there are any discrepancies, we can address them at that point. No surprises in the 11th hour. So another thing, if you're thinking that, you know what, there's a sweet deal on this new car and I'm gonna purchase this vehicle, there's a little bit of financing involved, I don't think it's gonna be a big deal. Never assume. Always run that stuff by the person, the broker that prepared your pre-qualification, and just confirm that if there might be a serious impact to your qualification by proceeding with that. Oftentimes it's like, you know what, wait till you complete the transaction, you move into the house and the deal is closed, then go ahead and buy that car. Okay, and finally, the last thing you need to be aware of and very cognizant of is the down payment verification. So this one comes up all the time and probably causes the most stress these days because it's a condition that often isn't addressed during the pre-qualification, the pre-approval process of your mortgage, and it comes up right in the financing conditions when it matters the most. And here are the things you have to be aware of. Your down payment verification, any part of the funds that you're using for the down payment, we need a 90-day history. When I say we, I mean the entire industry. Every single bank and lender in Canada needs a 90-day history of those funds. Number two, when you present the documentation for these funds, put away your cell phone and the camera and stop sending in the snapshots. You need to log into the portal of your computer, your online banking portal. And if anything, that's where you can draw the statements. And when you do these, you got to make sure the documents that you do submit, because we see a lot of screen captures, which is fine, but you got to make sure your name and your account number appear are displayed on these documents that you send in. Okay, so the lenders need to verify the ownership. So 90 days history and ownership. And finally, the third one, any deposit that exceeds your regular income. So if you earn like $5,000 a month and your employer deposits $5,000 into your bank account every month, that's fine. The lender's not going to ask for 90-day history on that. That's your employment. But where they will ask for further 90 days is, let's say you get a rogue deposit into your bank account of $6,000. Okay, they're going to be like, where did the $6,000 come from? You're going to have to provide a 90-day history of that deposit into your bank account. Why, you ask? There's this thing called the Anti-Money Laundering and Terrorist Financing Act or something like that. But this is the reason why, the primary reason every lender in Canada has to adhere to this act, this legislation, or whatever you want to call it. That's why we need all this paper trail when it comes to down payment. So any rogue deposit into your bank account that exceeds your normal pay will be scrutinized. 90-day history. And furthermore, they need to know where that money's come from. So if it did come from, let's say, your line of credit, that could turn your application sideways as well, because now you're qualifying in a different guideline. You're using borrowed money for your down payment, and you probably were not qualified for that. You were probably qualified for using your own sources. So this could totally turn your application sideways and often result in a decline, or you'll have to reroute the application very quickly. Okay, let's wrap it up. So today we talked about the three factors that really come up in financing conditions, that really the most popular ones that tend to wreak havoc during the financing conditions. So be aware of these and address them as soon as possible upfront when you're doing your pre-qualification. Like if you're not getting paper and detail when it comes to your pre-qualification, you do not have a legit pre-qualification. Okay, so here are those things again. We talked about stability, and I mean stability with your income and your credit. Make sure the story that you told the mortgage broker when you filled out the application remains that way all the way until the closing date of your property. So everything should stay the same. And finally, the last one we talked about, down payment verification. This one can turn into total chaos. There's a lot of paper involved. It's stressful. You feel like you're getting interrogated, but that's normal. That's what down payment verification is these days. So number one, you have to provide a 90-day history for all the sources that you will be using for your down payment. Further to that, you have to make sure the documentation that you provide has to be quality. It has to have your name and account. The lenders have to verify account ownership. And lastly, for any rogue deposits that exceed your regular pay into your bank account, lenders need to know where that's coming from. So if there's some $10,000 lump sum that came in there, you're going to have to provide a 90-day verification on that source as well. All right. Hope you got a lot out of this. Take care. See you soon.